This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Buongiorno a tutti. I am Paolo Sironi, your host of The Banker's Bookshelf. Now, The Banker's Bookshelf is a podcast inspired by authors and researchers of the most interesting books and papers, which found a prominent space in the libraries of curious bankers and fintech entrepreneurs. In our previous episodes, we hosted Sanjit Chodari, author of bestseller Platform Revolution. Now, Harvard Business Review recognizes him among the top 10 business strategies in the world. And we had Mario Nava, Director General of the European Commission for Technical and Structural Reforms, together with Thorsten Beck, Academic Director at Florence School of Banking and Finance by the European University Institute. They presented the recent work published by the European Supervisory Digital Finance Academy. Then we learned from anthropologist Erin Taylor and economist Annette Brolos that quantitative data is not enough to understand client behavior. And we redefined the key concepts of client centricity to better shape fintech innovation. Last but not least, previous to this episode, research analyst and policy expert Edwin Saliba joined us to share the banking perspective of The Economist Impact. The Economist Impact is a research unit of the prestigious The Economist Group. But today, I have the pleasure to crown this panoply of distinguished guests by hosting a conversation with Arnoud Boot, a distinguished professor of corporate finance and financial markets at the University of Amsterdam, whose academic work is particularly dear to me and my own research activities. Arnoud, welcome to the Banker's Bookshelf.
Paolo, thank you. Thanks for having me.
Arnoud, before we step into the amazing content of your research, let the audience of the Banker's Bookshelf know what you actually do and how you work in the financial industry.
Yeah, Paolo. Let me tell you that I have always managed to combine more pure academic research, which goes into mathematical modeling of economic events in the academic journals, with the real world. And I'm always inspired by this interaction with the real world. So if I look back over the last 20, 25 years, apart from writing academic research on financial intermediation, so the whole situation of financial markets, financial institutions, banks in particular, I have been involved with several central banks, the Swedish Riksbank. I was chairman of the Dutch Central Bank's Bank Council, which is the advisory body of the central bank. But I also was in the European Systemic Risk Board. So I like these different perspectives, and it has taught me a lot.
Now, we actually met a couple of years ago for the launch of the European Supervisory Digital Finance Academy in Florence, whose work was part of the Banker's Bookshelf previous episodes. And myself, I made a presentation of my latest bestseller, Banks and Fintech on Platform Economists, and you opened the day sharing content from a recent research paper that you published with other researchers of the European Central Bank. The title of this work that I want to show to our audience, for those who are following on YouTube, is Financial Intermediation with Technology, What's Old and What's New. And you can all download it from the website of the ECB, or you can go to the Arnoud's personal website. We'll provide all links at the end of this episode. Now, I've read the paper when it was published and found it groundbreaking. I want to know, Arnoud, if you can explain to us in simple terms this conceptual framework that you depicted in this paper, financial intermediation and technology, what's old and what's new. How can banks and fintech exert market power?
Yeah, Paolo, thanks. Thanks for this excellent introduction. What we were after was, we see many technology developments, information technology developments. But in a sense, that's not necessarily new in financial intermediation and banking. We have had many rounds of technology changes. Think about the ATM, the most simple one, or online banking. So we were after what is the current changes in information technology, how can it impact the industry, and what are the essential dimensions? And that's the core of the paper. We were a long time searching for the essential dimensions, and in the end, they were kind of obvious. One crucial dimension is this information dimension, that information, meaning databases and the processing of information, become, due to fintech, due to this information technology, wider available and potentially also available in a proprietary way. So wider availability, but also potentially within few players. So that's the information dimension. And the other dimension that plays a key role is what is what we call, and you already introduced it, we called it communication. So we have information, and we have the way that institutions link people, services, and other things together. What brings people together? And there we see the other major development. We see that platforms, think about the Amazon platform, where you can buy all kinds of different things, but also some type of financial services already. Platforms are becoming more important. And in terms of communication, the most obvious one, obviously, is the iPhone, the apps that we have. We no longer see a bank, we see the app on the telephone. So we have two major developments. One in terms of availability and processing of information, and the other is the interfaces. How are things linked together? The interfaces, like platforms as the most prominent example. So those are the two key dimensions. And once you look at these dimensions, you see that banks are if I take banks as a central point, because banks will become less central. What is a bank and not a bank, we can talk about it a long time. But let's use the word bank as we know it. The bank as we know it is basically has a distribution network, has a clear connection to customers based on its distribution network. So it is, in a sense, a first point of contact almost with customers. And traditionally, banks would have some market power in that role, because in order to get to the customer, you need a distribution network. The search cost would otherwise be enormous. So what we have seen is, and that comes to the communication dimension, that the search costs have come down enormously. That started with the internet, and it was further facilitated with platforms. On the internet, platforms readily suppliers and the customers can find each other. So the distribution network of a bank as a way to overcome search cost has become less important. So that's one dimension. And the other one is the dimension of information. Banks obviously have more information today than they had in the past, because it's easier for them to collect and process information. But all kinds of other players have come up that potentially have even more information. So even more information, think about, if we use Amazon today as the example of big tech, and big tech are the platform operators. That's how we define big tech. And we distinguish it actually from the more narrow concept of fintech, which is automation, the use of information technology to improve products, to improve processes. So fintech is, in a sense, what a bank can acquire by itself. Big tech, these big platforms like Amazon, are a potential, what we say, existential threat, because they might be able to do more than what a bank can do. And where is then the essential dimension? The essential dimension is the combination of the platform with a wide variety of services that runs over the platform. Let's say the Amazon platform again, a wide variety of services. And that wide variety of services gives the platform operator potentially superior information. It gets information from non-financial services, and it might be able to use that non-financial information in addition to financial information, while the banks, they have some type of platform, but the platform is dominated by financial services, and they have much less information if it comes to non-financial information.
Okay, so let's take a breath, because so much good and deep content. And I make a little summary of it to highlight the key concepts I heard from you. So we're saying here that looking at the economic transformation in many sectors, two key elements are important that shape market power of players: information and communication. It's not just banking, but it happens also in banking. How can I describe that in banking? Information is the hard data. For the fintech entrepreneurs and the bankers listening to this podcast, hard data is what you have in the core banking. It can be the transactions from payments, or data for the adverse selection. That means the credit function. Now, for many banks, it became very difficult to generate value out of these confined pieces of information. And therefore, what is happening is that through the open banking and open finance, they can now embed that information somewhere else into the platform economy, where contextualizing and commingling with other type of information, more market power can be created to be relevant in front of the consumers. And I would say typically this is really so for payments and credit, and we've seen it already in the market. On the other side, communication is the interface, as Arnoud called it. And the interface typically is me and you, is people talking to people. And we know that this is basically a conversation that requires humans in the loop. However, we're all experiencing these days that generative AI is creating new tensions in terms of creation of narratives and communications that somehow can, for the good or for the bad, and should be regulated, disintermediate these interfaces, these human relationships. Now, what is communication? While information is the interest rate margins and the payment transaction fees, communication tends to be fees for advisory or positioning of investment products, which is a growing space for generating returns for many banks, in particular in those countries where interest rates were negative for a protected period, like Europe or Japan, but still remains relevant in a world where interest rates go up, replenishing interest rate margins, by credit risk, by buy them back after some time, because the credit cycle is not shining as we would all want. So now is understanding the key elements of how you use technology to reposition information into external ecosystems and redefine communication better and cheaper in front of consumers, that banks can leverage these two elements to exert this market power. So now, Arnoud, you're saying that typically there is more, and I concur, analysis on the role of hard data than the role of communication, right? So, but you expect that, and we're seeing it in the market, that communication will be more discussed going forward as a key mechanism to engage with clients. Is that so?
Yeah, let's take also this link that you clearly make, with market power. So traditionally, the distribution network of the bank gave a lot of market power. It gave the bank information about the clients. It made the bank have this first point of contact with the client. It was much difficult to get the client away from the bank in a sense. What we see with the platforms, and the platforms that they open up in a sense, they become the point of contact for the customer. The bank delivers services to the platform, and actually the bank now suddenly faces also more competition from specialized players that have access via the platform to the market as a whole. So the distribution network of the bank, in a sense, has been replaced with this platform, which sometimes there might be a few banks that are able to recreate a platform which is competing with the platforms of the Amazons and the big techs of this world. But that's not yet very clear. So the market power of banks that originated in the point of contact with the customer via the distribution network of the bank, that has been diluted. And that market power is, in a sense, replaced by the market power of the platform, together with the bigger information set that the platform operator like Amazon can acquire. And there comes in the point that you're making. Traditionally, one point, Paolo, but because this is the hard information and the soft information, because you were talking about hard information as the opposite of soft information. So what we see is traditionally the bank had soft information based on the commercial lending officers knowing the business, and the bank was able to make decisions based on this soft information. Information technology already for some time has led to a codification of the information, the hardening of information. So it has to fit within the computer, in a sense. The hardening of information has reduced, in a sense, the role of soft information. And what we see now is that the platforms that use much broader databases, also behavioral databases, where we buy, sell stuff, what we buy and sell, when we buy things and sell things, that type of information, in a sense, is becoming superior. It looks like soft information, it's almost behavioral, but it's being codified. And there is the market power, potentially, of the big platform operators being superior to the banks.
It is a fascinating perspective. And now, you talked about how the data. So for a moment, let's focus on the information-related innovation. Using data can definitely have positive effects, but can also lead to negative externalities. So power comes with responsibility. You identify some key trends in the innovation with our data, but also key concerns. Which are them that we have to consider?
Yeah, Paolo, any development always comes with concerns. Obviously, the market power that we have been, both of you and I have been discussing so far, the market power that comes with the platform and with the superior data is something that needs to be contained. Because the network, we call this as economists network effects. The network operator, which is the platform operator with superior information, could basically keep others out and make things less competitive. So how do we contain the market power of big tech? And that has to do with their superior information and potentially superior access to the customer base. So that's one key concern. So market power, as it was before with banks, actually, because we also were concerned in the past about market power of banks. Because so far, in a sense, banks have been consolidating to protect their position. They are becoming a little bit like dinosaurs of the old world to protect their position. And you have to make sure that markets are sufficiently open and that finance is competitive. So that's one key concern. The other key concern is once platforms become very important, we get all types of operational risks and cyber risks. They can be enormous, those risks, as we already see. If the payment system doesn't work because of cyber attack, economic activity falls down, dies out. So cyber risks, operational risks become crucially important. The third one, privacy concerns. As we know, all this data being collected, which to a large extent is even public data, behavioral data, where we buy things, what moment of the day, all these type of things, where we travel. There are privacy concerns. And to what extent are we willing or do we need to contain these privacy concerns? And there is not one answer, because you see that the new generation might be more relaxed about it than the old generation. It is also not a discussion which is special to financial services, because think about healthcare. If I get hit by a car on the street and taken to the first hospital, I want the hospital to have access to all my medical information. But that's a random hospital I'm getting to. So apparently privacy concerns are not being dealt with in that case. They have readily access to my medical data without my approval, because I might be unconscious. So we have all types of risks. And then maybe the last one to mention to start out with, you may have others that we highlight, is once you are more dependent on hard information, and in a sense that's what's happening, hard information. In general, the economy is going to look more alike. Behavior is going to look more alike, meaning we're all simultaneously going to buy something or sell something. So the risk in the economy, the depth of a down period and the ups of a good period are typically going up. The economy becomes more volatile. And that's another aspect of the revolution that we are currently part of.
We saw that many banks have been closing branches in the recent years. According to a recent analysis we made for the latest global outlook of banking and financial markets, we saw that more than 30% of the branches of German banks or Italian banks disappeared in the last 15 years. But you also know that in the UK, we now have 80% less branches than there were 15, 20 years ago, essentially. And that started way before the global financial crisis, which is actually creating another concentration, if you like, of these aspects. And poses different, if you like, concerns and opportunities in terms of how to remain relevant in terms of communication, especially with the individuals and the local communities. So you talked about innovation with information, and what about communication? What do you see here, thinking about the transformation of the banking channels?
Yeah, Paolo, if you look at here, my country, the Netherlands, you can walk around here for days without seeing a bank branch. It's 99% has been closed. 99%. There's hardly a bank branch left. So if you look at the communication channel, a lot of my research, particularly early research, it was about relationship banking. And relationship banking, you and I, we might not be the youngest generation, but I think many people, when they talk about relationships, they talk about people meeting each other. So they are talking about interactions between people. They're talking about more soft information that you get by observing somebody, by trusting somebody, by knowing somebody. So the question, one important question on the communication front is, what is happening to relationships? Because relationships can also give a distinct competitive advantage. Because we can compete, you and I can compete on the price, but that can be imitated. You can lower your price, I can lower my price. But relationships are more difficult to imitate. And if we, based on a relationship, can serve each other better, because we understand each other better, that's a distinct competitive advantage. And that had been part of a lot of my previous research. And is that now less relevant today? And that's a big question. And there, the answer might be that the tendency of financial institutions, by having all this legacy, meaning having to close all these offices, legacy of technology, legacy of people, because the people they have may not be the people for the new world. So they have a legacy of everything. Are they still able to understand the importance of having relationships with key clients, and that there is a competitive advantage? And one conclusion that we are drawing is that there is, apart from the technology that makes relationships more difficult, there is also, due to all the changes and banks looking inside instead of outside, they are investing less in relationships. So that means that banking becomes, or financial sector becomes, more transaction-oriented instead of relationship-oriented. And if that's the case, that will amplify potential risks in the economy. Because soft information, knowing each other, means that you can pull each other through a difficult period. So it has a time element. Your relationship is very often a time element. You are in a more difficult situation today as a business. We as an financial institution can help you. But that requires a relationship orientation.
Yes.
So the more myopic transaction-oriented finance is probably going to dominate.
Let's say that the self-fulfilling prophecy can occur where banks are becoming more transactional and therefore they become more irrelevant in essence. Now, the last question is, all of this is a complex transformation of entire industries, of which financial services that can be re-understood by looking at how businesses are investing into more information and more communication, or a mix of both. This needs to have consequences and has consequences on policymaking priorities, thinking about prudential policies, monetary policies, competition policies, and data policies. What are you saying in this paper to conclude, to address these other complex, if you like, elements, which is the overall governance of this transformation process?
Yeah, Paolo, as we already discussed, this is obviously a very complicated aspect for policymakers. We talked about privacy of data. Yeah, privacy, the use of data. How do you go about it without killing the value of data? Yeah, so it's very difficult. It's very difficult. It may also not have one answer because it may move over time, the answer. And we are in the middle of a technological revolution. I think we are in the middle. People always think they may know what it will look like. I think we are in the middle. We don't know where this will end precisely. And what does it make? What does it tell you as a policymaker if you don't know where you get to? How far behind can you be in terms of rule making? Or do you have to slow down developments in order not to be caught in a way that you can no longer correct, like the regulation on competition issues with big tech, where the attitude is we have to act because otherwise we will be too late to act. So there are all these concerns. So in terms of policy challenges, in the end, I think there is one big conceptual change that we have to make. Mm-hmm. And that will be a difficult one. I think level playing field, in the end, is crucial, level playing field. But financial services will be offered by different types of financial institutions in the future. There isn't disaggregation. Specialized players are becoming more important. Things are being combined in different ways. So we're used to regulating banks or financial institutions, basically, combinations of activities. But we're getting institutions, market-based lenders that lend directly to each other. How do we regulate different institutions offering similar services? And that's going to be a very big challenge. And that reminds me of, and that's maybe a good, at least for me, a good end of this answer, is there is an important paper by the Nobel Prize winner, Bob Merton, who was talking about we have this institutional type of regulation, but we need to get to activity-based regulation because activities, wherever they are undertaken, should be regulated in a similar way. And that's really a difficult question because if it stands now, think about prudential regulation. We look at a bank and we say, how can we keep the bank stable? And we are much less looking at how do we get a level playing field with particular activities, regardless who is undertaking these activities. So that's one of the big challenges.
Now, this is a very interesting research paper. We just touch upon the key concepts and invite everyone to download Financial Intermediation and Technology, what's old and what's new, from the web pages of the European Central Bank. But where the audience of the Banker's Bookshelf can find all of your research, Arnoud, and how they can follow your activity.
So send them to my website, just Arnoud Boot, Dutch pronunciation, Arnoud with an D, Boot with an T, Boot in English, arnoudboot.nl, and you have it all together.
Now, Arnoud, thank you very much for being such a wonderful guest of the Banker's Bookshelf. All stay tuned for more. as more episodes and research discussions are coming. I think that by now it is clear that the Banker's Bookshelf is our collective moment of critical reasoning. We get inspired by authors and researchers like Arnoud Boot of the most interesting books, papers, and publications, which have found their prominent space in the libraries of curious bankers and fintech entrepreneurs. With that, we can all make better informed business decisions. Arrivederci and enjoy the jingle.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.